All right, hello everyone. My name is Larry Allison. I'm the CEO of Oracle. Today we are going to be talking about our possible acquisition of Sun Microsystems and if that would be a strategic fit for our company. So today we have one of our project managers, a financial analyst, and financial consultant on the line. We are going to talk through this decision. So to start off, is Sun Microsystems a good strategic fit for Oracle?
Larry, great question. So I'm a project manager for this project, and one of the things that we started off this project is this even worth doing the acquisition? So we did the analysis, and we saw how Sun Microsystem can add value into Oracle and how we can grow, if it will grow or if it's not going to grow. So one of the things I wanted to start off is market trends are changing. Market trends used to be that each company had its own specialization, whether it be hardware, software, or services, or storages. Over the last 5 to 10 years, what we are noticing is the companies are expanding their specialties, and their companies are growing into different fields, like such as a hardware company is actually dabbling into software companies. And one of the things is that to follow that market trend, it would be great for Oracle to expand its services into different areas and be that one-stop shop that you had once mentioned that you would envision Oracle to be. In addition, there are differences in terms of the customer bases between Oracle and Sun Microsystem. Oracle has typically been the highest, high-end clientele. Sun Microsystem will provide that smaller businesses and will help you expand that customer base and will ultimately help you increase the revenue. And this isn't the first acquisition that Oracle really has done, right? So you have done a successful acquisitions over the last 5 years. I mean, the acquisitions you have done is over $30 billion worth. So your team is really there to handle the acquisition well. So, do you have any questions on that?
No. What are we using as our methods to value Sun Microsystems during this acquisition?
So that's a great question too, right? So the way I think, and this is our team that believes we should value the company Sun Microsystem in a way that we should merge income-based valuation and market-based. So let's talk about income-based, right? So it should be valued with the discounted cash flow model. It is a public company, and a lot of financials are available. And our financial advisors will tell you how what financials look like. But we should look at this as a standalone company, and we should also think about this as if the Sun Microsystem right now, if it was acquired by Oracle, how would the financial look as well? So because there should be some synergy, right? So we're gonna do the evaluation in both of those methods. In addition, we have also done our research, and we have evaluated comparable companies to see what the market comparables look like, just so that we don't overpay or undervalue the company.
Okay, awesome. So let's look at some of the required rate of return on this possible acquisition, please.
Thank you, Alexandra, for asking for that. First off, our valuation puts Sun Microsystems enterprise value about 9.67 billion, with an equity value after accounting for debt of 8.41 billion. These aren't just numbers; they reflect a well-calibrated plan backed by a WACC of 10.7%. This rate match the risk and the financing structure of this deal, balanced nicely with 80% of equity and 20% of debt. Look, take a look at this pie chart. It clearly lays out our capital distribution, emphasizing our strategic approach to maintaining a solid financial footing.
Okay. Could we also see the base case cash flow projections too?
Yes, moving on to our cash flows projection from 2010 to 2014, we are seeing significant growth with free cash flows expected to reach 9.67 million by 2014. This trajectory isn't just promising. It shows that Sun's potential to add value to our operations and effectively execute our strategic plans over the next 5 years. One of the critical components of our valuation is the terminal value as well. This is calculated at the end of the year of 2014, um, and we are just using a conservative growth rate of 3%. This projects the perpetuity value of Sun Microsystems at about 12.97 billion, underscoring the value we expect to our forecast period. And also, well, here we add another visual that also show this trajectory. And at the end of the year of 2014, we can see the terminal value of all those forecast periods.
Okay, awesome. So what are we looking at for total enterprise and equity value?
Well, here's another visual for you, a bar chart comparing the enterprise and the equity value. It illustrates the clear distinction and the substantial financial stakes. For the enterprise value, we have 9.6 billion. For the equity value, is around 8.41 billion. Those are our analysis.
Thank you. That's really great. So is there anything on our multiples analysis that we have prepared?
Yes. So after looking at the enterprise value, which we calculated to be $3.14 billion, we took the enterprise value and divided by the sales of 13.44 billion, and we get a EV to sales ratio of 0.23. And this kind of low EV to sales multiple suggests kind of a perceived lower revenue or growth potential, which isn't quite favorable, but as we'll talk about, it's not the end all be all in our acquisition thesis. We also looked at the EV over EBITDA ratio, and EBITDA is earnings before interest, taxes, depreciation, and amortization. We got a negative EBITDA of minus 1.79, which kind of shows that Sun Microsystems is not currently profitable, but through our acquisition, we aim to utilize this this new component into the business in other ways, and we're not looking at profitability in a siloed fashion. And just to kind of reiterate, the lower multiples indicate concerns about future growth and profitability, but that's not the end all be all, as we'll see in our further analysis.
Thank you. So next slide, please. I did provide some of the effects of synergies on our enterprise value. So if we are using our enterprise value at 3.14 billion, we are looking at a price per share of $7.40. Our current Oracle offer is at $9.50, just slightly higher than IBM's previous offer. And we are looking at Sun Microsystems' current share price of $6.69. Next slide, please. So going forward, we do have a range that we are willing to offer if it does come down to a bid war between us and another competitor, such as IBM or anyone else who comes into the field. We are willing to pay a range from $8.42 per share to $14.55 per share. So we are thinking that the best price would be $11.38 per share, but we are prepared to go into further talks if anybody has more time on the line to talk about it at another time. But at this point, I would like to conclude this call, and I do appreciate everyone's effort on the call and that we were able to get some really good values, and we will be taking this back and evaluating, and there should be more to come out soon. So thank you everyone on the line.
Thank you.